Good morning, everyone. Welcome to this episode of Beyond Max Q. I'm Mollie Jahner, your host. It's been a while, a hot minute since I've done one of these, so I'm excited to have Mac on today to kind of talk about founders and funders. So he sits right at the center of both of those things, and now he's in a new role as the director of go-to-market for Chassi, which we were just discussing before we started recording, means he's the director of all the things. Because if anyone knows go-to-market, they know that that encompasses a lot. So I think it's going to be a good podcast today. I'm excited to dig in and just get to know what's going on in there. That would be great. Mac, would you mind introducing yourself and telling us a little bit about your background?
Yeah, absolutely, Molly. It's great to be here. So my background, I started my career in pricing actually at
Mm.
LexisNexis, large legal tech software company. Pricing was a really great place to start because you kind of learn a lot of different pieces of the business. It's also a great operational lever. Took my pricing knowledge and expertise to K1 Investment Management, private equity fund investing in B2B software companies. It's about 20 billion in AUM by the end of the year. They invest exclusively in kind of businesses that are 5 to 50 million in reoccurring revenue, but a lot of the businesses well exceed that. And when
Yeah.
I was at K1, I actually grew and ran the value creation practice within K1. So think of us as like we were an in-house strategy consulting team that was working with all of the investments that K1 was making. But we were
Mm.
also helping K1 decide which of the businesses we should be invested in. And
Time
pricing,
out. That's really interesting. So I want to dig in more on that. Like, how do you decide which businesses to invest in? Please keep going, but I want to call that out for the listeners.
yeah, absolutely. Yeah, definitely a great topic to get into. But actually, one of the levers we were working on the most at K1 was actually pricing. So I kind of carried my pricing strategy background into K1 Investment Management, and then post K1. So one of my core pillars at K1 was building a network of relationships and partnerships with different software vendors and things like that that could help the portfolio. Chassis was actually one of those. So I met the founder of Chassis, got to know the product a little bit, decided, hey, this is the right product, the right
Yes.
place, and the right time. So I made the jump to doing all the things go to market, but carrying over a lot of my experience in investing to understand what a good business looks like,
Mhm.
to then kind of reflect that in the work that I do now at Chassis. So that's probably a good segue into what did we look for in terms of a good investment at K1, if you want me to go ahead and go into
Yeah,
that
I
now.
would love that. I mean, I think that's
Yeah,
the thing that's on everyone's mind, right? The founders
right.
always want to know, okay, what are you looking for? How do I get my business funded? And I think that's a prime question. So please elaborate.
Yeah, absolutely. I mean, if I had to kind of like break it into a little bit of like a framework of how to think about, okay, like what is an investor ultimately looking
Mhm.
for? I mean, it depends on what kind of stage you're at, right? There are definitely going to be a series of key metrics that matter most when you're looking for, raising capital and things like
Mhm.
that. For I think the middle market private equity, growth equity space in particular, I mean, I think those things are, you know, customer retention is obviously a big one. So when we
Mhm.
think about from a metrics perspective, what I think is the North Star metric is something along the lines of NRR, net revenue retention, because then you're
Mhm.
looking at how long do your customers stick with you? How much do they expand? How much do
Yep.
they maybe downsell? It's kind of like a good overarching metric to get an understanding of how healthy the business is from a customer perspective, not just from
Mhm.
an acquisition perspective, but also from a, general ability to monetize your customer base once they become a customer. But above all else, I think there's two key criteria that we at least look for more on the qualitative side that I think are really important stories for you as a founder to be able to tell. And that is,
Mhm.
how is your system mission critical and a system of record? So mission critical means the people that buy your product are using it every day, right? It's
Mhm.
it's a core to their business. Their business can't function without your product. And then I think the system of record piece really is the stickiness factor, right? So
Right.
do you store the data inside your platform, and do you make it hard for me to move off of your platform or your
Mhm.
product or whatever it is to something else? That's kind of where the system of record comes into play. So is all my data effectively in your platform? And as we know with the age of AI, the data storage aspect is only becoming more and more valuable. So
Yes.
those are kind of a couple of filters and criterias, but obviously there's a whole host of metrics that are really important, right? Like customer concentration, like
Mhm.
when you're 10 million in revenue and a growth equity fund is looking to invest in you, they want to make sure that you don't have, significant customer concentration risk. Like, hey, your biggest customer makes up 30% of your revenue, because that means that customer is going to be able to, have a lot of requests. And if that customer were to churn or leave or whatever it is, then,
Right.
you're kind of stuck with a significant hole in your P&L. So things like that are obviously important. I think generally speaking, coming from the investor side very recently, I think the general trends that we're seeing in the investor market right now is that The market is rewarding businesses that are not only growing pretty quickly, so double-digit growth metrics, but also businesses that are relatively profitable. We
Right.
used to use the rule of thumb, rule of 40, which is your EBITDA margin plus your
Mhm.
growth rate kind of from a top line perspective. I think now that's becoming more of like a rule of 50, in some cases even rule of 60, right? And when you look at
Yes,
some of the IPOs that have been going on and things like that, like Figma,
that's
it's like
crazy.
you see that reflected there.
Absolutely. Well, and while we're still on the investment piece, I would love to hear your perspective on just the like what goes through the mind of an investor, a person who's a part of a big fund like that. Because I mean, we all have met angel investors. There's family offices, and then there's big VC funds like you worked at. I would love to hear what's that perspective from a big VC fund. What how does that work? How does that go? Because we know we don't get to be behind the scenes, so it'd be interesting to hear like a little bit. You don't have to divulge any like proprietary details, but
Yeah,
it'd be interesting to hear. Like it's almost like a book, like the memoirs of
yeah.
VC.
Yeah, definitely. Might have to steal that book idea. I mean, I think, realistically, how investment decisions are made is very much by committee, right? I mean,
Yeah.
at the end of the day, you're going to engage with a deal lead or deal partner, somebody at the fund that ultimately is going to be the champion for like, hey,
Hmm.
I think you have a really good business here. It's a really great idea. Now I need to understand everything about your business as much as possible because I need to go convince a committee of people that we should make this investment decision.
Right.
Right? Because obviously everybody on that committee has a fiduciary duty to their LPs and
Hmm.
their investors, right? To say, okay, we're making the right investment decisions.
Hmm.
I think if you're a founder and you're kind of looking across the landscape, I think aligning the capital that you raise to whatever you need operationally to get it
Hmm.
done is really important. It's a huge focus of, in my prior life in an investment firm, a huge focus of ours was how do we want to operationally partner with these founders and how do we
Yeah.
ultimately want to help them kind of grow their business from X to Y?
Hmm.
So I think there's a lot of aspects in understanding like it's not just about like the hard diligence, which I would consider the things like, the Q of E, understanding your cash flows, actually making sure that the cash proof checks out, doing the technical
Hmm.
due diligence and like reading the code of the product, right? Which are typically going to hire third parties to come in and do a lot of those third party
Hmm.
assessments for you. But I think there's also this huge kind of soft element that goes into it of like, what value is this business actually creating? And I think the way to answer that question is like a
Yes.
tip to founders, because it's going to come up in the investment committees of these businesses, is to basically start with what problem are we solving? And is
Right.
that problem valuable enough that people are going to continue to pay us money for
Is it
this?
actually a problem that other people think it's a problem?
Exactly, right? Yeah. And is this a problem that's going to exist in so many years? I think that
Yes.
was a big discussion topic in the investment world, and it still is, right? I still work
Hmm.
with a lot of investors and things like that in my current
Yeah,
role.
I'm sure you're still very well connected.
But at the end of the day, I think what a lot of people are asking is like, hey, with the rapid iteration of AI and everything that's going on right now, right? Like, is this a problem? Is this a need that will still
Yeah.
exist in, 5 or 7 years, right? And I think that's another kind of inside baseball aspect is like,
Mm.
if you put yourself in the shoes of the private equity firm or the VC firm that's ultimately making the investment in you, I
Right.
think what you need to assess and understand is like, they're underwriting a model, right? So they
Hmm.
have to financially go in and kind of say, look, we think this business is going to grow. They're also putting a time horizon on it, right? So like
Yes.
we're going to invest our capital in this business for the next 5 years, 3 years, whatever the time horizon is. So I think understanding the pretenses of that, of like, this is the time frame of which the investor is looking at my business. Here's
Hmm.
the story that I need to tell over the next 5 years, right? And I think 5 years is a pretty typical time horizon. But you need to be able to, reasonably believe that you're going to continue to grow or continue to be a good business for those next kind of however many years.
You survive 5 years. Yeah, that's really interesting. And I know for a lot of our hard tech founders too, that number is usually 7 years. It's like, okay, can I
Yeah,
make it in seven
makes
years? Can I
sense.
have a POC? Can I get something like my thing to market so that people can see that it's real? Because it's obviously tough to manufacture and build. That takes a little bit longer than some of the AI companies. But I love that point is like, are you going to be viable in 5 years? Because
Yep.
it's a good question. Like, am I going to put my money into something? Okay, I want to switch to the founder side because you were lured. You were lured from the funders to the founders, and I would love to hear like that story and like what switched, kind of in you and for your career
Yeah.
that you wanted to make that jump.
Yeah, absolutely. I mean, for me, I think it was really about the like the product itself. Like I'm inherently a very product minded person. I get very excited by products that are solving problems that I
Yeah.
understand and can conceptualize. So in this specific case, I mean, this is so Chassis. We work with other private equity funds and private equity backed businesses to basically think of us as like an MRI tool for your
Yep.
portfolio companies. So we get in and kind of do this entire diagnostic. We model the entire lead to cash process. There's some kind of AI and machine learning that we apply to then understand, hey, where are their value creation opportunities? So effectively, a lot of the work that I was doing
Yep.
at the prior fund, Chassi was, a great partner in that type of work. So understanding the space, the landscape, all of those sorts of things, I saw that there was a huge opportunity in this market. And at the end of the day, I just get excited about solving hard
Yeah.
problems. And this is not a super easy one to solve. But also, I think a big kind of key piece for me, and I think this is maybe a good tip or piece of advice for anybody who's looking to make that jump. It's about, the timing of it all. So understanding like, hey, we ultimately are, where are we at in the life cycle of this problem being solved, for example? And I think where private equity is right now, there's a huge emphasis on how do you create more incremental value in these businesses, not just the financial engineering aspect of what, private equity used to be. So I think now is the time for a product like this, which means I was like, I can't really wait. Like if I'm going to make this move, I'm going to make this move now. And I think this is the right time to do so. So also it was a lot of fun. I think I obviously learned a lot working within the portfolio that I did. But I think for me, it was like, I haven't, it's time to kind of put my money where my mouth is. Advising, and I've been working with a lot of businesses over the last, 4.5 years or so. But I think now it's like, okay, I need to go like do the thing. And being director of go-to-market, I do a lot of things, which is obviously, a great kind of segue.
I would love for you to talk about Chassi. Tell us what do you do? What does it do? Promo it for us because it sounds fantastic and I want to hear about it.
Yeah, absolutely. So as I mentioned, think of Chassi as kind of like the MRI tool for a private equity backed business. So what that kind of means is we hook into all your systems of record. So your CRM, your ERP, and all your systems in between. We extrapolate not just like the field level data inside those systems, but the metadata within those systems. So sales rep goes into your CRM, call it Salesforce. They update a record. We pull that actual update that was going into the system. So we can effectively map every single thing that's going on across your systems. And what we do is we model the lead to cash process, which is really important because a lot of things kind of stem from what is happening to our customers from a bottoms up perspective. So most analyses, or when you bring in consulting firms and things like that, they're going to kind of take a top down approach. They're going to pull the data from the CRM, build some models, and kind of try and do some analysis layered on top of that. We're starting from the bottom layer and then building it upwards, which means we can then do a lot of really interesting things on top of that. So that would include like building you a sales snowball and a bookings and a billing snowball. So effectively reconciling what is the customer records from your Salesforce all the way through to your NetSuite instance or whatever your ERP is, to understand where there's opportunities like revenue leakage. So where are we leaving revenue on the table because of missed billings or things of that nature? Churn. So we can actually go in and say, hey, look, every customer that's ever churned has churned for these indicative reasons. And we pulled them from the system. So there's kind of
That's really interesting.
more science behind it. Yeah. And then with that, actually, we can get into things like your ICP, your ideal customer profile, right? Because then we're starting to understand things like lifetime value of a customer. How long do your customers typically stick with you? And within our platform, it's actually completely like basically segmentable, which probably isn't a word, but you can go in and segment anything.
We can make it a word. It's a word now.
Chassi coined word. Yeah. It's,
yes.
But at the end of the day, like I think the beauty of the platform really is, what we're displacing is we're displacing somewhat of a need to spend a ton of money on Tableau dashboards where you're kind of banging your head against the wall trying to, effectively get to that perfect view that you're looking for.
Well, and how to interpret it too, because like, you can build all this stuff, but then who's actually telling you what to do with it? Like, I think you mentioned it with the big consultants. This is a problem that you solved, it sounds like to me, which is like exactly what you said, like why you joined. It's like you encountered this problem, I'm imagining, on a regular basis. It frustrated you because you're a product guy and you like to solve problems. So now here you are at Chassi doing that very thing.
Yeah, exactly. And the reason that we work with private equity funds and private equity backed businesses is because the number one time where we see this become, the kind of the red herring in the room that then makes people act on it is boardroom misalignment. So at the end of the day, like the board's going to ask you a bunch of questions. Should we invest in this segment? Should we go talk to these customers? Most teams, it takes a really long time for them to go in and then segment that retention or like that NRR, like I talked about earlier, by each of their individual segments. So what we're effectively giving is an ultimate pane of glass, right? And we even had a CFO client of ours kind of mention this. He was like, any question I get from a potential investor in diligence, I can answer through Chassi, right? And it goes both ways for even like your current board. Your board's going to ask you a lot of questions on what we should be doing. With Chassi, you can get to that answer so much faster, but you can also get to more of an action plan so much faster, which I think is the key part of it.
Well, oh my goodness, so many questions. RevOps used to be the name of the game back, when I was doing marketing and sales and being able to actually explain yourself and explain why you're doing certain things. And Chassis essentially can do that, is what I'm hearing you say, is like it can kind of say, hey, because the lead to revenue or the lead to like cash flow is so important. And being able to see all the different touch points, are you able to kind of show what marketing levers are working as well?
Yeah, absolutely. So that's definitely something where like we can go in and calculate like your roaming or ROAS, right? So like your return on ad spend, your return on marketing investment, those sorts of things, because we can effectively filter everything by the actual lead source. So you can go in and you can say like, hey, customers that were brought into us by this lead source typically stick with us longer. There's a longer LTV relative to the CAC or the customer acquisition cost. So there's a lot of granular kind of metrics that we bake into the platform that can help you identify areas of opportunity for your business, which was what excited me, I think, the most, because in summary, I think like what we do is we're connecting all of your sales data with all of your finance data, right? We're bringing the two organizations together. We're helping you make strategic decisions. We're typically working with the CFO, but the CFO is typically bringing in all the other people across his organization to say, hey, how do we all stack hands and kind of go execute on these types of initiatives, which is really exciting.
Yeah, that is very exciting. Well, and like you said, you have your kind of consultant interpretation too, which is helpful because you don't need to hire someone from like a McKinsey or you kind of already have that baked into the platform, which is nice.
Yeah, exactly.
So we still have you because we always keep these short and sweet, but I would like to ask a couple more questions if you have some time.
Of course.
I want to talk about, as a kind of transitioning from funding to founder, what do you feel like your greatest challenge has been in mindset shift? I think that I would love to hear your perspective on that.
Yeah, it's a really good one. I think it's easy when you're in an investor seat to think, hey, look, here's what the business should look like to go to exit, right? Like, here's the perfect profile of the business. Great. I think accepting that you're never probably going to get there, and there's going to be a lot of things that kind of crop up in between. And like, honestly, is like a show of humility for myself, right? Like, we always kind of wondered on the investor side, or I always at least kind of wondered, like, hey, like, we should go do this thing. We should go build this analysis, or we should go invest in this segment, right? You throw out a lot of ideas and you give a lot of kind of helpful discourse and context. But at the end of the day, like, there's a lot of business challenges that come up, whether it's like systems related or it's personnel related, that you don't really totally get a full picture of when you're an investor. So I think operators turn investors make really great investors because they kind of understand some of those challenges and scales and growth. But I think it's all about finding that healthy balance, which has been a big challenge, right? So it's the challenge of like, let's just go do this thing because I know we need to, because we're going to sell the company for more money if we do it, relative to, okay, but what can we actually go achieve, and what can we do? I think there's like a middle ground, a middle space in between that you need to be cognizant and thinking of, like, what does a great business look like in 5 years, but also like the immediate short term, like what do we need to be doing today, and how do we actually get there? I think that's been just a kind of a fun challenge to navigate, right? Because it's fun being on the other side of the fence, right? Like, you kind of get to see like, oh, this was actually that thing that I didn't understand when I was an investor trying to tell the business that they should probably go do this, right?
Go do it.
And anybody who's backed by a private equity-backed business is going to kind of resonate with that, I think. But it's cool to see it from both sides for sure.
Well, I love that too, and it's really hard to have a dream, I think, and like hold on to that in the face of like all the different challenges that come up. And that's the part that I love about founders, is that they have that dream and they still like are really dreaming and hoping, and that's important. It's hard, I think, when you're on the funding side, of which I've been on a couple times. It's like, you just, hey, here's what we need to do, but it's actually their dream. And so it's like tough to sometimes cut or make those decisions. So it's a good perspective. I would love to, again, while we have you here, talk about term sheets really briefly. It's on my list because I think I always get a lot of questions about those.
Sure.
So what are some red flags in a term sheet? Because that I think would be really helpful for everybody.
Yeah, absolutely. So, I mean, I think at the end of the day, the best advice that I can give when it comes to like term sheets is just making sure that you're kind of like eyes wide open, getting alignment with your investor every step of the way, right? I think it's getting in the room, talking about the term sheet live, getting in
Yes.
person. It's much easier to read the person in person and to
Mm,
understand like what it is that they're ultimately kind of going through. But also, I think having the honest conversation with yourself up front as a founder, right, to
mhm.
understand like what are my objectives and what are my goals here,
Yeah.
right? So, like understanding concepts and things like participating preferred, like what does that
Mhm.
mean for me down the road and what are the different scenarios? I think asking the investors to kind of walk you through those different scenarios. So it's like, hey, say we go sell the business for this much. What does that mean
Right.
for me? Right. And like having them kind of walk through the different options and scenarios
Mhm.
of what's ultimately going on. But I also think understanding from your perspective, right? It's a little bit different when you're going through a growth equity transaction. So I think
Mhm.
understanding the dynamics of a majority versus a minority position in the business and what
Yes.
it again, what it is that you're actually trying to achieve. I think understanding like the rollover mechanics and dynamics, if there's an
Mhm.
earnout, right? What does that earnout mean for me? Is it
Mhm.
clear? Do we actually have alignment on what it is I need to achieve to hit my
Mhm.
earnout? All things of that nature. Probably like one of my favorite books on like term sheets just in general is Venture Deals, just because it kind of
Okay.
goes through all the ins and outs of like, hey, here's all the pieces of a term sheet that you need to understand. It explains it
Mhm.
much better than I ever could. But I think those are some of the, like the just the negotiation points and things
Yeah.
of that to keep in mind. I also would say too, like I think sometimes as a founder, it's easy to get hung up on like specific things, right? Like I
Mhm.
want to have, the right to hire who I want to hire, for example. So I'm going to bake that into the term sheet. Like things like
Sure.
that, I think are always like somewhat like if you're if you're working with the right investors, you shouldn't
Yeah.
necessarily have to put those clauses necessarily in the term sheet. I think keep the term sheet to more of the economic points, and then you should just kind of
Certainly.
understand who's investing in your business to have the good faith action of like, hey, I don't need to protect myself against certain things
Mhm.
like that. But generally I see a lot of those come up and sometimes they just end up stalling negotiations further than
Mhm.
they should. And term sheets should be focused, somewhat more on the economic points. But a lot of the non-economic points are some of the points that you can get kind of hung up on. Um, yeah, that's
What would you
generally speaking, though.
Well, no, that was really helpful, and you brought up something else that kind of popped a question in my mind. What would you look for in an investor? What would you look for in a partner?
Mm. Yeah, I think about this a lot because obviously I had to play that part. And now that I'm on the other side, I
Right?
work with a lot of investors because we sell into private equity funds and,
Yes.
and, and whatnot. So generally speaking, I mean, I think it's a couple of things. I think one, looking for an investor that understands your space well enough that they're going to give you good network effects. What I mean by that is some investors, obviously, if all they've ever done is health tech, for example, or all they've ever done is hard tech in a specific vertical, whatever that is, those investors are going to know so many different people in that industry, in that space that
Yes.
they can introduce you to, and they can make a lot of relevant connections and kind of help
Mhm.
you build. So I think looking at an investor's entire portfolio, saying, do I fit in this portfolio,
Mhm.
right, is a good start because there's a lot of opportunities that kind of build off of that. But
Mhm.
also just like their general understanding of the market, right? Like you want somebody that can help you kind of parse through like, hey, here's the direction of the market and here's where it's headed. I heard this from 15 people.
Yeah.
um, the other thing that I would say too is like it kind of depends on what you need as a business in
Mhm.
that given point in time, right? Like more money is always great from an investor, but like
Mhm.
at the end of the day, I think that there's some of these like existential factors that make a bigger difference, like
Yep.
who they might know, or I think it's becoming more and more popular, right? And this is why Chassis exists, is the value
Mhm.
creation team and the value creation resources that they're ultimately going to give you. Some
Mhm.
investors, the value creation resources are a little bit more hands-on. Other investors, the value creation resources are more on a as needed basis.
Yes.
Sometimes it's more of just like a network of experts and consultancies. I think you need to take a hard look at your business and say what do I need right now, right? If
It's a
it's
great
like
call out.
the engine's running and we don't really need a lot of outside consulting
Yes.
resources or this, that, and the other, we just need capital, then like maybe that's something to consider. But I
Yeah.
think being really, really picky about those sorts of things because
Mhm.
this is a really interesting time, right? Because there's more funds out there than ever.
Yes.
So I
Yeah.
think you as a founder are taking a bet on the investor that you're bringing on as much as they're taking a bet on you as being the next
Mhm.
big business, right? So I think, some those are some of the call outs that I make because I've just kind of seen it on both sides, but
Mhm.
there's obviously a lot of factors that I think go into play on what makes the right investor.
No, that was a great answer. I love that. Honestly, this interview there's a lot of gold nuggets. So I hope all the founders listening are pulling things out of this. And then obviously if we have funders too, listening to, hey, here's the perspective of somebody turned founder who, how are you feeling? How are you going through these processes? And also check out Chassi. So we always end with the same question. What are you currently reading? And it can be multiple books or it can be no books. Some people say the back of a cereal box. So you tell me what you're reading.
So I actually just picked up a book. I have it sitting right next to me here, that I've been reading. That's really a great book, and it's actually funny because it's almost like too relevant to our conversation today, but you can kind of see why I'm reading
Okay,
it.
Mac, you picked it up
So
for
the book
this.
is, so the book is What a Unicorn Knows by Matt May and Pablo Dominguez. So Matthew May and Pablo, they're actually operating partners with Insight Partners. And
Okay.
so they've worked with a lot of different businesses similar to the capacity of which I was working with in
Mm-hmm.
my previous fund. But effectively what the book's about is it's about how to scale a business, right? It's how to build
Yeah.
a unicorn. I love the title too, What a Unicorn Knows, because
Yes.
it's kind of catchy. Actually, it was funny. My wife saw the title of the book and she was like, "Were you reading a book about unicorns?" And I was like, "No, no, the business unicorns." She was like, "Oh, okay,
Yes,
got
it's a kid's book. Thank
it."
you. Yes.
Yeah, exactly. She thought it was like a fantasy book, but it's
Oh, okay.
actually
Okay.
probably one of the most tactical books that I've read on understanding how to like
Good to know.
ultimately go and scale a business. So there's a lot of aspects in it around. It's actually almost takes it takes a very like systems approach to
Mhm.
like what you should be thinking about in terms of like your different stages of growth and scaling.
Yeah. I'll have to
So
get that one. That sounds great.
super, yeah, kind of just discovered it. I've actually know Matt May relatively well.
Oh, okay.
So it was one of those that I finally picked it up and decided to read it, and so it's a really good book.
Fantastic. Thank you. Well, is there anything else that you want to share that you haven't touched on today that you feel like, hey, people should know this?
I think at the end of the day, I can't harp on this enough because I come from a pricing background and
Mm,
I'm obsessed with product. I think you will build a great business if you fundamentally start with like, what is the problem that I'm solving? And then backing into how important is that problem to
yeah.
people that they're actually going to buy the product that I make, that it's going to solve
Yeah.
that
They're
problem
going
for
to pay
them.
you money for it.
And I think at the end of like that's usually where like I think a lot of founders get enamored by, oh, I'm solving a problem that I know exists. But they're not solving a problem they know exists that people are actually really trying to solve for, and
Mhm.
that needs to be solved, right? And so I think the pricing person cap or the pricing person in me always says like that's the best place to start in product management is understanding what
Mhm.
the actual like true willingness to pay is, and that comes from
Yes.
understanding how much of a problem that is for somebody. So I think at the end of the day, like every decision that we all evidently make, it's a decision that's going to create value, and I think that is the best way to kind of think about like how do I go and raise money? How do I
Mhm.
find the right investor? Right? It all starts with like what problem am I solving, and what's that problem going to look like in 5 years?
Yeah, well said. Well done. Well, thank you so much. If you want to connect with Mac, please do so on LinkedIn. Check out what he's building with the team over there at Chassis. And thank you so much for your time today. I really appreciate it.
Thanks, Molly.